Well, hey everyone, we'll give everybody a second to join in, but I just wanted to welcome you to our PowerChurch Office Hour. My name's Justin. It's this talk is on bank reconciliation. So it's the part of closing the month where your books meet reality. I'm excited to hear some of what Thomas will present today because it's fun for me on the communications and marketing side to learn as much of the numbers as possible. But again, I just wanted to thank you for what you do to serve the church. If you have any questions throughout, you can put them in the Q&A up at the top or in the chat, and we'll get to as many as we can at the end. But I'm going to stop talking now because Thomas has some awesome stuff to get through.
Hey, everybody. This is Thomas from PowerChurch Tech Support. And like the man says, today we're talking about bank reconciliation, which is something you ought to be doing every single month, at least to your checking account, to make sure that your accounting is on track. Hey, Justin, can you see my presentation on screen? Excellent. All right, so bank reconciliation is the check your work process, that every month you should be checking your work by doing the bank reconciliation, which is a process where you compare it to the actual bank statement. It's very important to do every month, otherwise your accounting might just not match reality and you'd never know. Very important to, in addition to just presenting the regular reports, the income and expense statement and so on, to be able to do the reconciliation and prove that you know how much money is in your bank and why. The actual process on screen, PowerChurch will show you a list of transactions and you'll check them off on screen essentially if they appear on that month's actual bank statement. And PowerChurch does a bunch of math for you. And after you've checked off all the stuff on the statement, if everything's great, it says $0.00 at the bottom, and you can run off a report that proves that you've done your bank account right that month. And so like I said, you ought to be doing this every single month. And you should be doing it as generally the very last step after you've entered and posted every single thing for that month. Every outgoing payment in accounts payable and payroll, every contribution deposit, banking interest, any transfers, anything that happens that is going to appear on your real life bank statement, you've got to have that entered and posted, ready to go. That bank reconciliation is really a final step for a month. And so if you're watching this, you are probably in one of these three situations. So if you're just taking over for bank reconciliation from somebody who's been doing a good job and you just need to keep the train on the tracks, the first thing we're going to show you here is just a demo of what that looks like, what a normal reconciliation with no serious problems looks like. We're going to go through, mark stuff with a C. It's going to balance. It's all going to be great. Most of you watching this probably are not quite in that exact situation where everything is totally fine, though you will be a month from now. If you are, the most common situation is the middle one here, where there's a mess that's kind of been accumulating. That if you've been doing everything that's real and right in your books, putting in every check, every deposit, and doing your reconciliation, it can balance to zero every month, even if you also have a bunch of old mistakes on there. And you'll know if you're in this situation because you do your reconciliation every month, and every month you leave the same set of things outstanding, a bunch of old items that are never going to clear, a bunch of old mistakes and old corrections. And after we've done the boring, successful reconciliation, we're going to show you how you deal with that problem, how you clear all of the mess off of there to make it so that you don't have to deal with that every single month. And the third situation is if you just haven't been reconciling, like if you're taking over for somebody who has been just not doing it or has been doing it in a way that doesn't balance to zero, then what you do is you pick a month to get the train on the tracks, and we're going to kind of do a dummy reconciliation to force it into place, probably do a balance adjustment. And then the next month after that, you're going to be back in scenario one where everything's fine. We're going to cover that as well. Though scenario three is if you're, if you don't care if things were bad before, you just need to say, well, as of the start of this January, or as of the start of this June or July, we're going to get the train on the tracks as of that particular time. That's the scenario we're going to go over, is how you go from not having been doing your reconciliation to getting it on track just over the course of a single month of books. All right, and so first thing we're going to do is the everything is fine scenario. All right, and so I know this is a lot of words on screen. We are actually going to be doing this in a PowerChurch on screen in just a couple of minutes here. But what we're going to do is we're going to first check to make sure that we are in the good scenario. We're going to make sure that the last month's reconciliation balanced, and we're good to go. Second off, we're going to go into the reconciliation screen, put in the closing date and closing balance that we get from a real bank statement. And then we go through and check stuff off. You put a C next to the items that cleared the bank, C for cleared. And then it'll do math and tell us that if everything is good, it'll tell us that everything's good by balancing to 0 at the bottom. All right, so next up, I need to flip my demo onto screen. Let's see.
Yeah, thanks for the hold music, Thomas. Keep that going. That's good.
I appreciate that. Yeah, no, I'm told that I have a very excellent nonsense voice.
Right, a missed career, man. You get that's.
All right, so here we are. We're going to share my demo here. Allow. Okay, so welcome to my PowerChurch. All right, and so first thing we're going to do is we're going to check to see how the reconciliations went before. How did the last reconciliation the last guy did? Or it's been a while, how did the last reconciliation you did go? And where we go to look at that is here. You go to Fund Accounting and then Reports Fund Accounting. Same place you go to get all kinds of reports. And in the great big list here, the big list of reports, one of them is this guy, Bank/Credit Card Reconciliation Report. And here in my demo, it's only been done once before, back at the end of April, beginning of May. We're going to run this report and just look at one thing on it to see that we're in the right place. We're going to see if the difference is $0.00. That means that our predecessor got this reconciliation square, and we don't need to worry about being in scenario 3. All right, and so in this situation, we're going to be doing a reconciliation for the end of May. It'll be the May 31st bank statement, because the last one was done about a month prior. And so we go into Fund Accounting and then Reconcile Bank/Credit Card Accounts. And it takes us to this little screen here. You choose what account to reconcile. Your main bank account gets filled in here. You put in the date from the actual bank statement, the closing date, always the last day of the statement. Most of the time, that's the last day of the month. Some people, their banks give their statements a few days before or after, and some unfortunate people, their bank statements come in the middle of the month. You always put the real date on the actual bank statement and the actual closing balance off that bank statement. In this case, 13/7/80/72. And so as of the end of May, this is really what was in the bank account. And so we have to prove that we have got that in our books. And so I hit next here. And this is the main bank reconciliation screen. It shows you 2 lists of transactions. The first one is a list of deposits. We can see here we've got some accounts receivable deposits, some contribution deposits. And then down at the bottom, we've got the stuff that's leaving the bank, mostly outgoing checks, but also any online payments like these ones we see here being paid to the government. And so the job we do here on a normal bank reconciliation where everything is totally fine is we just go through and mark with a C. You double click to mark with a C or press enter, and it puts a C next to it for cleared. And in this imaginary scenario, everything's been going really great. And so all of these accounts receivable entries, they cleared the bank, no problem. All these contributions, these deposits are like that, just like this on the bank statement. I clear all of them except, take a look, at 5/31, the last Sunday of May was the 31st. And so just because of real life, obviously that money didn't get deposited on a Sunday. Banks are not open. And so this last deposit of the month, even though it's May business and it shows on here because it's dated May 31st, we don't mark it with a C because it's going to be on the next month's reconciliation as an outstanding deposit. Likewise, down here in the bottom section, we go through, I'm just double clicking each of these to mark them with a C if they cleared the bank. And I see these ones did, oh, this one didn't, we're going to leave it be. And we just go through and mark every item with a C that really cleared the bank. And here in this imaginary scenario, darn near everything did. A couple of people who got paid late in the month didn't cash their paychecks. You know, that happens all the time. Paycheck goes out on 5/29, they didn't cash it by the end of the month. So a couple of these people didn't make it, so there's some outstanding checks. So we go through and all these cleared the bank. And did I type in the right balance? I should be off by 0, not 90. Bummer. And so you go through and you mark everything with a C here. And if everything's totally copacetic, you're balanced to 0, and you hit done. I have accidentally left something off, and it's a little off by $90 here. If this were real life, we'd hunt that down. But first thing you go through and you mark everything with a C that really cleared. And then what if you have some problems? Even in scenario 1 here, where everything is fine, sometimes checks need voided. That just happens. So you clear one entry on the top and one entry on the bottom. You know, this 3881 and its 3881 void, these two cancel out. And so after you've gone through and cleared all the stuff that really actually cleared the bank, then you mark your matched pairs, the original check and then the void entry canceling it out. I've put in a typo on my bank balance. I must ask you to indulge me and pretend that this to balance says $0.00, and we're ready to hit done on here. But that's a normal reconciliation. It should balance to 0 at the bottom when you're done. If it doesn't, it means there's a typo or a problem somewhere, and that's always something you should hunt down. But the basics of doing a reconciliation are you go in and you put a C next to everything that cleared the bank. You don't put a C next to anything that's going to be on the bank statement next month. And then you deal with any corrections on the bottom and on the top in matched pairs. And so that's the scenario for option 1. Go back to my spreadsheet here. Yeah, the fellow in the chat is indeed correct that if we weren't on a strict timetable here, the right answer is that the most common mistake there would have been just I typed in the wrong bank balance amount. That would, yeah. So the next stop is, what do you do if there are bigger problems than that? More problems than just that one voided entry if you've got a pile of junk. So what you do there is, and I apologize that didn't come out to the penny. I messed up my math. Can't go back, I'm afraid. I'm so sorry. But the next scenario here, if things are not going smoothly, if things are not going to balance to 0, you are in scenario 2 or scenario 3. So say there's a mess. Say there's a reconciliation mess where you've been balancing, but every single month there's kind of a trail of old mistakes following you around. And that's the scenario a lot of you are probably in. That's dead common. What you do in that case is you're going to do 2 reconciliations to square it up. You're going to kind of redo your previous reconciliation, clear all the junk off of there, and then you're ready to move on to the next month. And so I'm going to pop open a second demo here. And we're going to take a look at what you do on the reconciliation where there are some issues that were left to you from the past. Okay. Sorry for the delay here, folks. I'm clicking on buttons. All right. So here we have the same situation here where these are all the same numbers we've seen. So if we go in and take a look at the bank reconciliation report for this, we see again, it balanced to 0. We're not going to be doing a balance adjustment to get this right. We're going to be dealing with individual corrections. And so if you're in this situation, your bank reconciliation, it looks like this. It's got a bunch of old voids and reverses hanging out on there. And so what we're going to do is we see the previous reconciliation. It was done dated 5/2 with this statement balance. This is a month before the one we did before. And we're going to redo it. We're going to do a second reconciliation for that month just to get the stuff off of there so we can have a clean slate. We put in the same statement date of 5/2 on the reconciliation we did in the past already, and the same balance off the same actual bank statement, and hit next. And the only thing we do on here is we clear those matched pairs of corrections. You've done some voids or reverses. You go like this, top and bottom. You clear those in matched pairs until they're off of your reconciliation. Let's clear all of that, top and bottom. And our numbers at the bottom equal here by 2,650. And we're just clearing off the stuff that we've already identified. We know these are mistakes and we fixed them. We already reversed these. And so the point of this reconciliation is just to go in to the same date, the same balance, a second time, clear the top, bottom junk and hit done. And then after you've done that, you go in to do your real reconciliation, the one we just saw dated 5/31. And then you go through and do your actual, you clear these because they really cleared and it balances to 0 when you're done. You go through and you mark with a C those that really did clear the bank and do your reconciliation for real. And then you're back in scenario 1, where after you've cleared all the stuff, it balances to 0 and you hit done. All right. All right, and so, but if you're just taking over as a bookkeeper, or if you've been doing the books for a while but haven't been doing the reconciliation, the solution is going to be in scenario 3. So I'm going to pop up my window again here. Apologize for the delay here. Just pulling up my spreadsheet. There we are. All right. And so if you're in scenario 3, where you haven't been reconciling, what you do is first you decide, well, we don't need to look at any reconciliation reports. They're not relevant. What we do first is we decide, what is the first month we're going to get perfect? Say, in this case, 5/31, right? So that means we're going to do a reconciliation 1 month before that. That in order to get things right for May, if there's been a real mess and the bank balance isn't right, we're going to do an April reconciliation just to get it forced right before May starts. And what we do is we go and we do that reconciliation for April and we mark every single item with a C, just blinded. Every single item. You just hold down the
Thomas, sorry.
Yes, sir?
Thomas, should we be seeing the PowerChurch?
Nope, just a spreadsheet. We're going to actually do this in just a second, but the presentation is, I'm going to go over the steps and then we're going to do it.
Perfect, thanks.
All right, so you mark every single item with a C, and then go back and remove the C's from anything that's outstanding. Like anything, if we're reconciling April, you would remove the C from anything that is actually going to be on the May or June or July bank statement. And your to balance is not going to be 0 because you haven't been reconciling. It's almost certainly not dead on accurate. But once you've cleared all the stuff, you postpone the reconciliation and do a balance adjustment, moving the bank balance up or down in order to be correct as of that date. And then you clear that adjustment and then you move on to the next month where you're in scenario 1 and there's no trouble. And so I'm going to actually show you how to do this. And this is something that in real life, you will almost always be wanting to talk to a PowerChurch tech support person while you're doing this. That will help you get on track with getting your bank reconciliation square, and then we'll leave you to it when you're back in scenario 1. But I want to show you how this looks. If you are just getting started in PowerChurch bookkeeping and you need to get your books on track as far as the reconciliation, then you do this little number. So I'm going to pop open another demo here. This will be just a moment. Okay. So in this scenario, we are going to allow. And so, oh, wrong demo. In this scenario, we're going to say, well, we know this is not right. No one's been doing reconciliation. And so we're just going to take the steps to force it into place. So first off, we go in and we're going to do one for the statement before the one we care about. Remember, the one we care about was dated 5/31. It's the end of May. And this one, the previous statement was from about a month prior at the beginning of May. So we go and we put in the real bank balance from that actual statement 1 month before the one we actually care about getting right. And we go in and clear everything. Oops, didn't mean to close out of that. We go in and clear everything, just literally every single thing. And then we evaluate, like, are any of these checks real checks that are going to clear in the future? And we say 3880 is. We expect to see 3880 on the next statement, so we remove the C from it. Okay, so we've done that. We cleared all the stuff. And in your real life situation, you might even have hundreds of items. There might be every transaction you've ever done for years in here. You just mark every single one with a C. Just absolutely blindly mark every single one with a C, and then go through and carefully unclear the ones that you know you're going to be seeing on the next bank statement or the one after that. And then we're off. We're off by $433.42. And we're going to, just once, for this 1 month, we're going to do an adjustment to set the bank balance right. And then when it's time to do the next month, we'll never have to do that again because we'll be right on track. So I'm just going to pop open enter transactions here. And so what we do is we put in our adjustment just for the very same date as the statement we're reconciling, 0502, and we call it something like adjust balance, and I note what I'm adjusting. If you find yourself doing this more than once, you're making big mistakes. Or an adjustment is really a special thing. You should do it just once to get yourself on track, and anything after that, you should deal with the individual problems instead of trying to do an adjustment. We can see here on the reconciliation, we're off 433.22, and we're high by that much. The account 1110 balance is $433.22 higher than it ought to be. So it needs to go down. You reduce a bank balance with a credit, 433.42, and you offset that with your main unrestricted equity account. If you've ever done any kind of balance adjustment, this is that. But this transaction, just without affecting anything else, knocks the bank balance down by the exact amount that we have found out it's off. I postpone my reconciliation, post my adjusting transaction, and then I go back in to reconcile just with the same numbers I did before. And here's my new adjusting entry. I mark that with a C, and we're balanced to 0. The only item without a C is this guy, which is going to be on the next bank statement, and so we're good to go, and we hit done. And having done that, now you're ready to go. You can post all the stuff for May and do the actual May 31st bank reconciliation afterwards, now that you know you're on track as of the beginning of that month. All right, and so all these scenarios are general, that everybody's in their own special situation. It's kind of a mix of these in my experience. And so this is a dead common PowerChurch tech support call. No matter what situation you're in with your bank reconciliation, if it's balancing, if it's not, if you have any questions about it, this is stuff we're used to helping people with. And we know it's fairly complicated, that there's a lot of different things here. Everything gets a lot simpler after you've cleared out all the junk. That the real goal of doing the reconciliation month after month is that every month you want to be in scenario 1. You don't want to be stuck in a situation where every month it's off or every month there's weird outstanding items. Your goal is to have it be dead on accurate to 0 every time and not leave any weird outstanding items that are not ever going to be on the actual bank statement. And so I have some general advice for doing bank reconciliations in any circumstance. And that is, first off, you always use the real dates, the real ending date and the real ending balance from the actual bank statement you get from your bank. Even if it's weird, even if your bank gives you a statement dated the 29th and the month ends on the 31st, even if, whatever the closing date and closing balance as of that date are, those are the numbers you put into the PowerChurch screen. You don't ever hit done on a reconciliation that doesn't balance. If you hit done on a reconciliation that doesn't balance, the problem kind of follows you around. Generally, don't do it. But you know a good reconciliation is good and you're ready to hit done if it meets 3 criteria. A good reconciliation balances to 0 at the bottom, says to balance 0. Every item that actually appears on your bank statement is marked with a C. And the only items that don't have a C are outstanding, stuff that is like that deposit from the very end of the month or checks that didn't get cashed. The only items that you don't put a C next to are the ones that you need to leave outstanding for next month's reconciliation. And if you've done any corrections, if you voided anything or reversed anything, you'll wind up with a matched pair, the original check at the bottom, the void at the top, or vice versa if it's a deposit you're correcting. And once you've done everything else, once you've got it balanced to zero, you clear those things on the top and bottom. And if you're looking for something on your reconciliation, if you put in a check or something and it's supposed to be on there, but it's not, a common situation, there's always one of four things that it could be. For something to appear on your reconciliation, it has to be all the way posted. You got to do post accounts payable and post transactions and fund accounting. Got to be all the way done with it. Second, it's got to be affecting the bank. If your transaction is just in error, not using the bank account or using the wrong bank account, it never shows up on the reconciliation. Reconciliation only shows you items that affect the bank account directly. Is it dated on or before the statement date? Anything from the future never shows on a reconciliation. If you're reconciling 531, a check dated 6/1 will not be on there because as far as PowerChurch knows, there's no chance it could even be on the statement. And so things have to be dated on or before the date of the statement in order for it to be possible for them to be on there. And the other thing is anything you cleared on a prior reconciliation stops showing up. And so if you're ever asking yourself the question, hey, I put in this check or I put in this transaction, why is it not on my reconciliation for you to mark with a C? The answer is always, always, always one of these four things that in order for something to show up to reconcile has to be posted, affecting the bank on or before the statement date and not have been cleared on a reconciliation you already hit done on. And so the first thing is to kind of figure out where you are at, just flipping back to the three reconciliation situations here. That if you reconcile and your reports all say they balance to zero, and generally there's not a bunch of junk on there every month, you're good to go. The next thing you need to do is just do a bank reconciliation just like it shows in the manual. You put in the right balances, you clear the stuff on the top and bottom, it says zero, you hit done. If there's a mess, you wind up having to do another thing first. And this is where we get into the probably call tech support. What you do is you do all of your corrections that need correcting. You go back to the prior month. I have more detail. You go back to the prior month and do that reconciliation where you clear just the top and bottom junk against the same balance you were using before. And then hit done on that and move on to the next month for real. And if you're in the situation where the reconciliations haven't been done or haven't been done right, you do a much more extreme thing where you just clear, you decide, well, what's the first month that needs to be right? And then the month before that, you clear every single thing except for any bona fide outstanding items. And then you do a balance adjustment. This one in particular, if you're in this situation, I would say just give us a call. If you are just getting started on the reconciliation and about to call tech support about it, the information you need to have handy is you need to have your bank statement so you can get the numbers off of it, just the actual bank statement for that month and ideally for the previous month. You also need to have a good idea of what might be outstanding as of that point, like what checks you had written that didn't clear the bank as of the end of May, for example. Because that's a part of getting it on track. Getting any reconciliation done correctly in any scenario requires you to leave a good list of things outstanding at the end of the month. All right. And so that's all I wanted to cover. And I know I breezed through this. That in reality, if you're looking at this, you probably have a reconciliation project of your own you're working on. And unless you're in the very simplest situation, you'll probably need to give us a quick call just to see what you need to do to get on track. But this is, in general, this is all stuff you can do on your own. And aside from the part where we guide you, we make you do the checking of stuff off on the reconciliation. And from the perspective of a tech support person, there is no such thing as a really bad bank reconciliation call. That as long as we know, okay, we need to get this right as of June, it doesn't matter if there's 1,000 errors on there. Scenario 3 means we can just clear everything, figure out what checks were still fresh, do an adjustment, and get past it. That if you've been thinking to yourself, well, I can't really do the reconciliation, it's a whole big thing, the problems of the past have doomed me. Not really. You can just kind of pick a month and decide, we're going to start being right as of this month, get the train on the tracks as of the month before, and you're good to go. Right. And I noticed there are a bunch of questions, and we have tons of time for questions. All right. And so if anyone has any more of these, drop them in the chat or the Q&A section. Yes. All right. Yeah. Yeah. Indeed, Sarah is right there. That if you're that's an accountant trick they teach you in school is if you're off by an amount with a 9 in it, that often indicates transposed digits. Most of the time, banks don't have big enough bank reconciliations where you need to rely on tricks like that. Not that it's not handy, but in general, what you're looking for is just the basic sanity check stuff of like, this entry appears on my screen. Is there an entry with that amount on the actual bank statement? Let's see. Let's see. Chuck has a question about Visa payments. The only part of this that would show up on a bank reconciliation is the part where you pay your credit card bill to Visa. That's the only part that would be on a bank statement. And if you're using the bank account directly on credit card charges, you should stop. But the only things that should be on a bank statement as far as credit card stuff is the part where you pay the credit card company out of your checking account. As far as I see Sarah asked, like, is there a better way? The answer is yeah, there's definitely a better way. The right way to handle credit cards is that you have a liability account that represents the amount of debt you have at any given time, even if it's just 0 or 1 charge worth. You use that liability account every time you swipe the card instead of the bank. And then when it's time to pay it off, you pay it off out of the liability, representing that you've paid off your debt. This has a couple of benefits. One is that it lets you reconcile your credit card the same way you reconcile a bank statement. Credit card reconciliation is different enough that I didn't go into it on this one. But if you've got a credit card and you're using it every month and paying it off every month, and you have a liability account that tracks how much you owe on the card, you can reconcile that the same as your bank account off of a credit card statement to make sure that you're dead on accurate the same way as you would a bank. That's less important, especially if you pay off your credit card every month. It's not a screaming urgency the way a bank reconciliation is, but if you are handling credit cards the better way with a liability account, you can reconcile those too. How to void a check in a previous month and rewrite it. So a lot of the stuff in bank reconciliation is dealing with corrections. By the time you're at the reconciliation, you've already completed the corrections. But if you need to void and reissue a check, there's a really cool way to do it, and I'm going to show that to you right now. Share my demo. All right. So where I go to reissue a check that has been lost or for whatever reason needs reissuing is, and you bring up the vendor and accounts payable. You go to accounts payable, maintain vendor records. You can actually do the same trick in payroll on the maintain list of employees, but you bring up the vendor that you're talking about and go to the history tab and say I needed to void and reissue this check here, 3907, right? This check got lost, we need to put out a new one. You select it and hit void, and you get this option that you don't have. If you just go to accounts payable, void a check, you don't get this option. You have to do it from here. You go to void and you tell it to reissue. You put in the actual date you used to reissue the check. You can print one right from here, or just put in the check number that you used. And and what it does is it creates the void, canceling out the original, and then it creates the new replacement. It does it in the correct way with the dates being like this, both dates being the new date, so that it leaves your May income and expense statement untouched. This still shows as a May expense, despite the void and replace that happened a couple months later. And then when you're done, you post that. And so all the stuff where on the reconciliation, you're clearing an original on the bottom and a void at the top. That's how you wind up with that situation is you notice that something's wrong, you go in and you do a void on it, or if it's being reissued, a void and reissue. Yep. Let's see. For the person who mentioned that they enter just great big lump sum credit card items, that works totally fine. The part of that is affecting the bank, the credit to the bank, is exactly right. That shows on your bank reconciliation. That doesn't mess you up as far as reconciling your bank, though it does make it impossible for you to reconcile a credit card. Okay, and say that you change the bank right now. Okay. Let's see. You can do all kinds of things to mess with the numbers, but you generally you would never want to change the bank statement balance that you put in. It is super important that when you go to the bank reconciliation screen and you're putting in a date and a balance, both of those have to be off of the actual bank statement, because the bank statement is our source of truth in this case. The bank knows how much money there is in there, and if we disagree with the bank, it's our job to correct ourselves. We don't want to mess with their number. Chuck is right. Yeah, if you actually do need to do a balance adjustment on your bank account, you do it. But again, never more than once. If I ever talk to somebody who's like every 2 months or every 2 months they're doing a balance adjustment, that's a sign that they're losing money every month, that something is going seriously wrong with the books. Doing one adjustment to get things on track, A-okay, got to do it. Doing more than one, always bad, is a sign that your procedures are no good. Okay, next question. I'm curious if it is recommended to post transactions before they appear on a bank statement. These folks only post items as they appear. I always post everything. If it's a real thing that is going to be on a bank statement, I post it. That's the bank reconciliation map handles that totally fine. You leave some things outstanding, it still balances to zero. Those things show up on the next month's reconciliation. And in general, it's best to have all that stuff posted ahead of time, because until it's posted, your other accounting reports aren't right. That you post all the stuff for, let's say, May, even the things that didn't clear on the May bank statement, you do the May reconciliation and you leave some of them outstanding because they didn't clear. That's all totally fine, and you do it all like that in that order, so that from the very beginning, from the first time you're done posting May, your May reports are right. Because if you hold off on posting that, you wind up with May reports that change through June and July as those checks clear, which is a pain. Okay, the adjustment journal entry. I did that one on screen. I'm going to pull it up again. Just so if you do need to do a balance adjustment. Oh, I posted one. Let me just pull up the posted one. So it's this guy right here. I put this into enter transactions. Let's see. Am I successfully sharing the screen right now? I am not, but I can be. There's my demo. Yep, and so this is the transaction that we're talking about. This is the one we put in earlier to get the balance adjusted as of end of April, beginning of May, in order to get us squared away for the real reconciliation we did in May. That this transaction, it's a credit to the bank and a debit to your main equity account, usually 3110. In this case, we needed to go down. If you're doing an adjustment, you might need to go up. It's mistakes, so it's basically random. You would do the opposite of this if your bank was going down instead of up. But ideally, you would only, again, do this just exactly once to get yourself on track. Okay, let's see. How would a person just taking over get a manual? Okay, so for PowerChurch version 15, we don't ship paperback manuals anymore, but the manual is just in the help menu. You go to help and then PowerChurch manual PDF. We don't mind if you print it out. It's a nice PDF. And you can also go to help and then contents, which gets you like a normal Windows help menu that has a search box on it. But that is just all of the exact same content as in the manual is in help and then contents. See, West Hills asks, if you reconcile with a liability account, can you debit the appropriate budget lines? Absolutely. That's the whole benefit of doing it, is that if you have a liability account representing a credit card where every month you're using the card, it counts against the budget, you're accruing a debt. At the end of the month, you pay off that debt. Absolutely. That's how that works. Every swipe of the card would be credit, liability, debit, expense. in the same way that writing a check is credit bank debit expense. If you're accruing a debt, you credit liability instead. And then when you pay it off, it's credit bank debit liability. And doing it with that method lets you reconcile credit cards the same way that you can reconcile bank accounts. And also lets it count against the budget and tracks how much you owe on the card at any given time. Doing your credit cards in one great big lump sum, it doesn't mess up your bank reconciliation, it doesn't mess up your income and expense statement, but it's not as good because it doesn't let you track how much you owe on the card at any given time. All right, so I see Marvin saying we just started PowerChurch 2 months ago, just starting to reconcile. I got 7,000 to balance. You are scenario 3. And so if you're in that situation where you just started PowerChurch, you're trying to reconcile, especially if it's your first month, for whatever reason, a lot of times you'll just be off. Things didn't go right the first month. If you're in that situation, what you need to do first is decide what is the first month we need a good reconciliation for. Say it's February, right? What you do a dummy reconciliation for January, put in the real balances and date for the end of January, clear everything, do an adjustment as necessary, and then you'd be ready to have a perfect one for February. That's something we can help with nuts and bolts. Like that is a very common one is if someone calls and says, hey, I want to get started on my reconciliation, or I'm trying to do my reconciliation, but it's off. The things we need from you are a bank statement balance and a list of items that are outstanding as of that balance. Like if you want to get things right as of the end of January, we need to have the bank statement from January, and we need to know what checks from December and January didn't clear by then and are going to be on a February, March, April statement. Armed with that information, getting your bank reconciliation on track is like a 15-minute support call or less. And if you are following along real well, you might just be able to go ahead and do it. You'd go in and pick what's the month before the one we care about, blindly clear everything except for outstanding items that you know are outstanding. Do your adjustment, post your adjustment. That your scenario, Marvin, is the scenario 3 option, which, because I do have a slide about it, I'm just going to pop it up on screen for your edification here.
Hey, Thomas, really quick, do you have access to that Q&A section, or do you want me to read off some of those?
I do have access to the Q&A section. I just started reading the chat, and so I was doing that top to bottom. Sorry. And so, yeah, here's the question the fellow was asking there is, yep, see tech support. I see that's already covered. That's the 800 number, 1-800-486-1800. All right, I'm going to flip over to the Q&A, do some of those, and then go back to the ones that are in the chat. Yes, it's being recorded again. Okay, so if you have 2 bank accounts, one general, one missions, you absolutely do not go through both of them like they were one account. If you have 2 different bank accounts, they should have 2 different numbers. Probably your main bank account is 1110 and your missions is 1120 or something like that. But they'd have 2 different numbers in the 1000s, and you would reconcile them entirely separately. That the reconciliation keeps that separate. And on that same screen where you're putting in a statement date and statement balance, you also put in the account number. And so I would expect if you have 2 checking accounts, they're probably literally 1110 and 1120 in the system, and you reconcile them quite separately. Willetta asks, what is the impact of the adjusting journal entry on the balance sheet? It does 2 things. It moves 2 accounts in the same direction. It moves your bank balance, and it moves your unrestricted equity, like the overall value of the church assets minus liabilities. It moves both of those up or both of those down in order to match reality. It doesn't affect any other specific accounts. It's the minimum thing you can do is just an adjustment between the bank account and the main equity. Next question is, what is the consequence of not closing a month in the fund accounting menu? And I'm pleased to tell you the answer is nothing. You do not need to close a month. Nothing bad ever happens if you don't close a month. The only thing that closing a month actually does is prevent you from posting more stuff to that month. And even that, it's like closing the door and locking it behind you, but not throwing away the key. You can reopen a month later if you need to. And so that's, closing a month. If you never did it, nothing bad would happen. You don't need to. Let's see, adjusting journal entry. Okay, did all the other stuff currently in Q&A. Hot dog. Yeah, Yeah, it was the adjustment there. It's the fund balance. If you're in an older set of books, the account you're doing adjustments against is 3001 called fund balance. If you're in a newer set of books that was started in the last 10, 15 years, it'll be 3110 unrestricted net assets. Those are the same thing, your main unrestricted equity account. It's much more likely yours is 3110, but if you have one called fund balance, it might be 3001. Let's see. Okay. Gina asks, our financial secretaries do not enter the electronic deposits that hit the bank at the end of the month that will be applied to the beginning contributions for next month has led me to do adjustments. So you ask, is the only option to insist they come in on the last day of the month to put in those deposits? And the answer is no. Tons of people are behind on their books. Almost every church in America is a little bit behind on its books, and that's totally fine. Whenever you're putting in a transaction, a contribution, anything, put in the date that it happened, even if it was a week ago, a month ago, a year ago. Your job as bookkeeper is to tell the true history of what happened when. And so if you've got stuff that needs doing, but the person can't come in until after it's done, just have them backdated. Let's see. Yeah. Should everyone use PowerChurch 15? Yeah. If you're on 14, all the good stuff that we're talking about is already there. I would say if you're on PowerChurch version 14, it is not like an emergency for you to upgrade. But if you're on 12 or earlier, yes, definitely. The ability to undo a bank reconciliation is super valuable. And in general, I would say, yes, you should be on version 15. If you're on version 14, it's not urgent to upgrade. There's some new features, but the really good stuff, if you're on 14 or 15, you're good to go. Let's see, entering in each receipt. Yeah, even if you're putting in each credit card receipt individually, that's all accounts payable. If you're using accounts payable for anything, you should be using it for swipes of your credit card. If you do a mass clear, like scenario 3, if you do a mass clear, how will that work with things like interest? The answer is you clear all that stuff. Interest is just a transaction like any other. So when you're doing a mass clear, you're doing it for a month you've written off. That if you need to get things straight as of June, you're doing your mass clear as of the end of May. And so if the May interest is there or not there or messed up or whatever, it doesn't matter to us at all. We just mark it with a C, if necessary, do an adjustment and worry about the specifics of things starting the next month. That's the way I always put it is, like, if you're trying to get your books on track, if they have not been right for a while and you're trying to get them on track, the first step is always draw a line on the calendar. Everything before that line is allowed to stay wrong. On that line, you do your balance adjustments, and everything after that line, you have to get totally perfect or else everything falls apart. And so that's the first step, is if you're trying to get your books on track, the first question is always, as of when, ideally the end of a particular month. And shoot, I'm running out of questions. How good is this?
So I think we might have a simple one for you. How can we tell if we're on version 14 or 15?
Oh, it says at the top that the very, very top bar above the file edit membership of it all will say PowerChurch Plus and then a number. If you're not on PowerChurch version 15, it's a $175 upgrade to bring you up to that, and it comes with 45 days of free tech support. That we offer a real low price on that because it's very convenient for us software manufacturers to have everyone on the latest version. So we try to encourage everybody by making it way, way cheaper than a new one, and also throwing in the tech support to make it a good time to get things on track. Okay, how to read the last page of the balance sheet. Let me pull up a balance sheet and see if it's a good visual aid here. But the answer is that the balance sheet is doing the big picture accounting equation. Now, if you ever taken an accounting class, you've seen it expressed as algebra. It's assets minus liabilities equals equity, which you can also express as assets liabilities plus equity equals assets. That it shows overall what is going on with your books. Let me pull it up here. So balance sheet through April. I always print account numbers. One of my pieces of stock advice is, if you're running a balance sheet or an income and expense statement for yourself, always print account numbers. It is super useful. If you're running one off to present in a meeting, probably don't. Too many numbers on a sheet of paper tends to confuse people. But so here's our balance sheet. First, it's got our assets. If we had any other assets than our bank account, they'd be here too. Building, land, vehicles, savings, investments, those are all assets. Then it shows us all our liabilities, what we owe to various people, mostly the government. And then the different equity accounts here, where it shows us we have restricted money set aside for this or for that, and then a great big chunk of money that's not restricted. And so the very bottom of this is on the last page here, where it has total liabilities and equity. So check this out. Total assets equals 10,878. If you take every asset the church has, everything that the church has that has money in it or is worth money, that's your total assets. The way I think of that is like think of your church as a pie. All the money the church has is a pie, and it's sliced up based on where the money is. Probably the single biggest slice is your checking account, but if you have any other accounts, those are slices too. And just very literally, the pie is the church. It's sliced up based on where the church keeps its money. The bottom half of the balance sheet, which adds up to the very same amount, it's the same pie, but it's cut differently. That instead of just showing this whole pie where there's one big slice that's the checking account, it shows us, well, actually, that's sliced up. This much is for the feds, this much is for the state, this much is going to the health insurance company, this much is for anything at all, and this much is our missions fund, and so on. That if your balance sheet is good, these numbers should always match. Total assets should always equal total liabilities and equity. And that's generally how you read that. This is just making a statement about, out of all the money the church has literally got in real life, how much is set aside for this, that, or the other thing. And that's what's up with the balance sheet there. That those accounts in the 2,000 and 3,000s are money that is set aside for something, either because you owe it to somebody or because it was donated for a particular purpose. Regina asks, should we use the date the check was written or the date it cleared the bank? The answer is always the date it was written. If you're putting in a record of an actual physical check that someone wrote, the date in PowerChurch should always be the date that is actually on the actual check. I'll always do that. Let's see. Do you address online giving? Yeah, Venmo is delayed in transferring, but we post the receipt when it's given by individuals. That's absolutely the right thing to do, Nancy. That what you do is so if you were in the simplest possible situation where you're not being charged any fees, what you would do is you would just enter in the online stuff separately from any cash and checks. You'd enter in those contributions and post them, and it would create these deposits that you'd see on the reconciliation. And just the ones from the last few days of the month would always be outstanding for next month. And if you're handling online giving fees, that's a little bit more than we can go into on this call, but give us a call. If you call us and say, hey, we're doing online giving and they take a fee off of each deposit, how do we handle that? There's an easy way to do that makes it all match reality and show up correctly. Rebecca, you mentioned if you're not seeing an unrestricted net assets, you probably instead have one just called fund balance. Look for an account that is numbered 3110 or 3001.
We've got a few new questions in the Q&A section.
Excellent. Michelle asks, my bookkeeper doesn't want me to put the date the check was written, but the date it was deposited, so it will match the deposit. How does that negatively affect the accounting? Deposit, I assume we're talking about contribution checks in that case. So the answer is it takes some things that would have been in a particular month and moves them to the next month sometimes. This matters only very little most of the time, but in December, it matters a lot. Because if you're doing that at the end of December, that means that some people who got their money to you by the end of the year don't get credit for it on their statement for that year. And so that's the main negative impact on that. And just in general, you want to use the earliest date, the date that it was given. I believe the technically correct phrasing they teach you in accounting school is you should record it for the date that it is realized or realizable, which is usually the date they hand it to you, which is usually the date on the check. If you have a choice between an earlier and a later date, always go earlier. That'll make sure it doesn't drop off your reconciliation when you shouldn't be. Gabriella asks about zooming in to make screen fonts larger. There are some things you can do in PowerChurch to make stuff bigger. depending on how your screen is, there's some things we can make larger. Call us on that one. That's outside of scope for this one, but it is something we can help with, but no promises depending on how your screen is. But there are some things to try that make stuff bigger. Gotcha. Okay, so Tyler asks about groups of contributions showing up as one line on the reconciliation, but separate on the statement. That is something you can fix with a process change. My usual advice that I give people over and over again, the solution to almost every contribution problem that anyone ever has is enter and post contributions in batches that match real life deposits. That is, when you're entering contributions, you should, actually I have a screen up right now, I'll flip over to it. When you're entering contributions, what you should do is you should enter in contributions until the total unposted down in the bottom right is the amount of a real life deposit. And then you hit done and post contributions. And then do it again. Don't enter in multiple batches in between posting. That's what causes that problem. Because PowerChurch wants to combine all the stuff that has the same date that was posted together. But if it's separate in real life, do it separately. Enter it and then post it, enter it and then post it in batches that match real deposits. Tom asks, will entering transactions in the wrong working month affect the reconciliation? And that's no in two ways. One is reconciliation does not care about accounting month even a little. It looks just at the date. And second, working month in particular doesn't actually do anything. You have to put in the correct month when you're putting in transactions. That's very important. But the working month setting just controls what the default is. It's not very important at all. But when you're putting in transactions, that's super important. Put them in for the right month. But even if you put them in for the wrong month, that would do nothing to the reconciliation. Reconciliation cares not at all about accounting month, only about dates. Yes, the answer is yes, this is able to view later. So Rebecca asks, if you have fund balance 3,000 as a group, no, you can't use group accounts. You probably have a specific fund balance account numbered 3001 if you're in that situation. You might have renamed it to be something else, but you have some account, some detail account in the 3000s that is your main unrestricted equity that you would use for adjustments. The answer is yes, we're putting this on YouTube later to Marvin there. But yeah, the fund balance, you've got to be a detail account, the main detail account that is in that section. Yeah, I disagree with Chuck's advice there. If you have two deposits on the same day, use a different date in PowerChurch for one. That would work, but I don't like falsifying dates even a little. The right solution is enter and post contributions is in batches that match real deposits. Enter contributions until you've got the total of a real deposit, then post, then do it again. That always gets you the right result. How to close out the month. So Niraja asked about closing out the month. The answer is I didn't, but that relates to a question from earlier about closing the month, which is that it doesn't do anything. The actual button you click that says close a month is not important, and you do not need to click it ever. It just prevents you from posting more stuff to that month once you're done with it. You can always reopen it again. As far as things you need to do at the end of every month, run the reports that your board is expecting to see, usually an income and expense statement and a balance sheet. Do your bank reconciliation to make sure you're on track. And that's it. You don't, there's not a close the month process in PowerChurch that you need to do. The only thing you need to do is run reports and reconcile your bank account to make sure you've got everything square. We got a minute left. Anyone else got a burning question? Making the font larger, that's font larger is a tech support call. Yeah.
Yeah. And for we do have an option with, if you're talking about raising the fonts for the webinar. I know that's always tough when we're trying to show everything. It will be recorded. We're sending it out. So if you want to watch it on a bigger screen later, that's probably the easiest suggestion we have for this, and always looking for ways to tweak the webinar.
Yeah, absolutely. Yeah, and if anyone has any questions, give us a call at PowerChurch Tech Support. If you don't have tech support, upgrade to version 15. It comes with 45 free days. And just call us. This is all stuff we can help with. If you're in one of the easier situations, getting your reconciliation on track is really a 10 or 15 minute phone call. If you're in one of the more complicated situations, It's never more than an hour. Getting a reconciliation on track is something you could get done today, this week, and not have it hanging over you. Give us a call and we'll help you get it squared away. All right. Cheers.
Awesome. Thank you. I'll have a great week.